Hello and welcome to Module 3 of the Forex Complete Solution Intermediate course. In this module we'll be discussing the construction of charts. And the chart we're going to be looking at will be the USD JPY. The idea behind this module is to put into practice the various tools, indicators, and candlestick formations that you have seen, from scratch. So we're basically going to pull up a blank chart of the weekly USD JPY. So if you were to open up your account, your charting software, you're just going to have a blank screen. So what's the first thing we're looking to do? The first thing is to establish the trend. And straight away we can see that we're in an uptrend. So what do? We go to our vertical trend line, and we can put it at a valid bottom. Okay, so you can put your trend line at a valid bottom and place it onto your chart. Okay, so there's your basic uptrend, and we can configure it, make it a bit darker, and it stands out. Now we're also going to extend that by introducing a channel. Okay, channel trading is an extension of trend trading. Okay, so mark fluctuations between ranges, between your two ranges here, your up and your down. So channels consist of an upper and lower band. In an uptrend, you may look to take profit as price moves upwards towards the upper band, and it will run into resistance. So here's our lower trend line. To create a channel, we're going to create an upper band. So again, you pull down your vertical trend line and you place it off a valid bottom. So we have a little spike here. We're at the bottom of the trend. We're going to link it up there. So again, you look at your couple of rules. Okay, so you're looking for a couple of touches off your trend line. So there is your channel in place. Okay, so you have a lower band and you have an upper band. So you can see that your trend is in place. So we can just configure it again and just make it stand out. So there's your basic channel in place there. Okay, so you're looking for your support on the bottom and your resistance on the top. So as you can see, we tested resistance and the market sold off. We tested our support again and the market continued. So it's valid entries and exits. So if you entered down here and you're looking to take profit, well, once you hit resistance here, the market once, twice, and then a little double top, and the market sold off again. So that's a simple way to trend. Again, these are simple tools. Your trend line, and now add in your channel. So that's a basic channel there. So if the upper band is broken, then you can look to initiate a long position. So if the upper channel was broken, okay, you could continue on and enter a buy position. But the thing about a channel is generally use it on a longer term time frame. Okay, we have our weekly chart here, so it gives a good indication that we're in a good strong uptrend. Okay, we can see our bottom, and our market has yet to retest the upper band. But as you can see, it does get tested from time to time. Again, this is weekly, so each of these candles are weekly data points. So when the market when the upper band does get hit, it would be time to initiate a short position. Okay, and if you're looking for a confirmation to buy, the market would need to break back above. But again, the market sold off and it went into a range, and again it tested the lower bound trend line and it continued. So our major trend is still in place. We're still in an uptrend, but as again, we can see the price deviations between our upper bands and our lower bands. So again, a channel, nothing too complicated here. You're finding the market in an uptrend and its support and resistance levels. And as you can see there in real time, again, the market has tested it once, tested it twice, which is a double top, okay, and the market sold off. And again, we can see the market tested the support at the bottom had a couple of tests and continued along on its uptrend. So that's a simple channel line you can use to pop onto your longer term charts to keep you on the correct side of the market. Now, you'll be looking to also add a Fibonacci extension onto your chart too, to give you a more of an indication of support and resistance levels. So the second tool we can add, so you go to your Fibonacci tool here, you can put it in at a valid bottom down below, and we can pop it onto a valid high, which would be just above here. Okay, so you can get your levels exact, get the high, which is 12,417. Sorry, the high there is 12,585. So we can just configure it. So left click, configure, and there we go. We can just change it to 12,585.00 just to get your figure. That's our upper, and we can configure our lower point here of the candle. It is 7743, so we can go to configure and we go to our low and 7743, okay, 0.00, and we have our Fibonacci. So there's another tool we've just added on to your chart, and again we can configure to make it stand out more visually. We can just extend the width, and there we go. So now your chart is starting to take shape. Okay, we have our longer term trend line in place, we have our upper bound channel in place, and now we have our Fibonacci. So now we have straight away we can look at a buying opportunity, a region to enter into the market. We have our 50% Fibonacci level, and we have our upper trend line which hasn't been broken, and the market bought off. Okay, and we're continuing onto our trend line. Now, to add another tool onto this, as we've discussed, I just want to briefly show how these will work. We've discussed our trend lines in detail and our Fibonacci's in detail on our basic course, but I just want to show you how easy it is to construct your chart. Okay, so whether the day before or the weekend before you're looking to trade, if you're looking to build a couple of charts over the weekend, it's a simple. Once you have a good charting system, it's as simple as this, just to get yourself on the right side of the market. So that's your trend, your channels, and your Fibonacci's in place. Now, if you're looking to build in one of your continuation patterns, as we've discussed, well, we can already see a bullish rectangle formation building. Okay, and we can see it here. Okay, you're looking for a consolidation pattern. So just to confirm your bullish rectangle formation, you're looking for a high point. Okay, and just pop it across and configure it just to make it stand out, and configure again just to make it stand out, and close it off. And we look for a support line on the bottom, and again, look, our Fibonacci is already providing us with support, and our trend line is supporting. So look how many supports we're putting in place already with these simple tools, and we can just adjust the price action. We can even change the color here. Okay, I'm going to change the color to red so it stands out a little bit more. Okay, and close and configure it, and there we go. And we can just point out what it is as well. We can add a text, so you can pop your text on there. We're looking for a bullish rectangle. Okay, a bullish rectangle formation, and just close. And we can just get rid of that and move it over and delete. Okay, so now our chart is really starting to take shape. Okay, we've three solid patterns on it. Okay, we have our bullish rectangle pattern. Okay, the price is looking to break above. We have our long-term trend line. We have our upper bound channel, and we have our Fibonacci extension. Now, that will give you three solid opportunities, safe opportunities to get on the right side of the market. Okay, so no matter if we're looking for we have a strong up move here, and our Fibonacci will give us an entry point. We have a consolidating market, so our bullish rectangle will give us an entry point to close above. We have a resistance level here, and our upper bound channel will give us a trade. Okay, we can, even in a strong uptrend, we can still look to go both ways. The market's in constant flux, as we say. The market has gone into a selling point there. So we've hit a double top resistance, and the market has sold off. So we're seeing the whole ramifications of the different types of price patterns in the market. Now we can go and we can have a look at some of our candlestick patterns as we looked at before, and how they will play out in the marketplace. Okay, and one we can see here is our tri-star bullish, which we discussed on our candlestick module. Okay, it was module 1. Okay, and here we have it down below here, our tri-star pattern. Okay, and I'll just extend it there so you can see it more clearly. Okay, sometimes these can be hard to see, so we have it right there, 1, 2, 3, and it was a bullish formation, and the market sold off. So you can refer back to these in the candlestick module. Okay, but there we have our 3 stars. Okay, our tri-star bullish, and we can see it on our real chart, and it's a bullish formation, and the market started to buy up. Okay, and that was one of the start of the move. Okay, and another candlestick formation we can see here is our hammer. Okay, and we can see it here in October the 13th. We can pull it up there a bit more. See the hammer forming out there. The market is hammering out a bottom, and again a bullish signal, and the market bought off, and that is our hammer. Okay, we can also see the 3 white soldiers. Okay, I'll show you the formation here of the 3 white soldiers that bought off our Fibonacci retracement. Okay, so the market 1, 2, 3, and the market went into its uptrend. So there's confirmations throughout. We can see our 3 white soldiers, a big up move off our Fibonacci 38.2, supported our trend line. We just broke out of our rectangle, and 1, 2, 3 white soldiers, and the market sold off there. Okay, so that was there's confirmations throughout the chart there. And you can put, just to show that you can put all of these tools into practice on a chart. So now your chart is really starting to take shape. Okay, the next tool we can put on is our moving averages. Okay, you go to your moving average and add a moving average. Now, longer term, because it's a weekly chart, we may look to put on a 100-day minimum, 100-day and our 200. So we'll put our 100-day moving average on first. There we have it there now. We can configure it, so we'll just make it more visual, and we can see it there, and then close it. So again, we can just close it off. Sorry, I must have deleted that. We'll go back to our moving average, add 100-day. We come to our 100-day. The width, and we'll just change the shape on it there, and we can see it there, and we close it. So we have it there now. So there's another indicator, our 100-day moving average. So the price is above our 100-day, it's above our trend line, it broke above our bullish rectangle. We can see our candlestick chart formations, such as our hammer and our tri-star dojis down below, starting to break out, as you can see in real time, how these indicators will work. Okay, especially as I say, you want to build your longer term trend lines on your either your monthly or your weeklies. Okay, so right now you can see that the market is still in a strong uptrend. Okay, but as we can see, we're coming into a resistance point. Okay, now on module 4, sorry, a future module on the intermediate course, we're going to go in depth on support and resistance points. But as you can see, our Fibonacci line there is coming solidly into a resistance point. Okay, and the market sold off. So no matter where you are on your chart, or no matter when, there's always a trade for us to take. So the main reason for this module was just to show you how to construct the chart and show you how and where you're looking to enter trades and how these tools will work. Okay, so again, I keep referring back to the trend line, but it's the most simple tool to get you on the right side of the market. And then to break it down, whether we're in a strong uptrend, like here, whether we're looking to a market that's consolidating, if we're looking at a market that's coming into resistance and selling off, we always know what we're looking to do. Okay, no matter where we are on the chart, our tools will give us an opportunity to go long or to go short. Okay, and to look for a consolidation, look for support levels, look for resistance levels. So we know what type of market we're in. As we can see, we're in a strong uptrend, but in any strong uptrend, the market will fluctuate. So you're always looking to get on the right side of the market. As you can see in a consolidating market here, the market's only going to break out so many points. Ideally, we'd like to get our 200, 300, 400 points up here, but it's all about timing. And so we can time this, okay, with our support and our resistance, and then finally we'll break out, whether it's a piece of fundamental data that was released, or whether it was a change in the monetary policy, for instance. We have our breakout point. So technically and fundamentally, we will have our breakout point, but all the while we're in a consolidating market. So just to recognize what type of market you're trading in. Okay, so a bullish uptrend, but right now during the bullish rectangle, we're in a consolidating market, and then it breaks out, we're back above, and again further supports here with our Fibonacci, and again further supports with our Fibonacci, and on the top here we're after running into resistance. So that is the basic, that is a good solid chart formation for you. You don't want too many indicators on your chart. For instance, if you wanted to put on a Bollinger Band, it could be a little bit too much. We could pull up a Bollinger Band and add it in, and you could have it there. You can see the market through the different ranges and see how the market is trading. But you won't really need to put too many indicators onto your chart. If you wanted to put a relative strength index too, you could go down, or your moving average convergence divergence, you could add it onto your chart, and there we have it. But again, you don't want too much on your chart. Okay, now, because look, the main thing we want to look at is our price action and our candles. Okay, so we don't need too many. Okay, we don't need a moving average convergence divergence if we already have our moving average on our chart. Okay, we won't need our Bollinger Band, because we can see how the price is moving. Okay, we have our support and resistance levels, but if you find you want to use a Bollinger Band instead of a fib or instead of a moving average, go ahead. But they're basically variations of the same thing. So the main thing is to get the trend in place and to build your chart from there. So when you're as a beginner trader, you want to train with the various tools and see which ones that work for you. But as an intermediate trader, and you're starting to trade into cash, you should be comfortable with what tools you're going to use. Okay, these should be the tools that you build onto every single chart. So if you're trading one or two various securities, your charts are going to be the same. So once you pop up your chart, you know exactly what you're looking for, whether your market is in an uptrend or whether it's in a downtrend, whether you're trading Euro USD or whether you're trading the Dow Jones 30. Okay, you know exactly what the market is doing. That is the main thing. So just to be aware not to put too many tools onto your chart. The first thing you want to be aware of is your price action. Right now we know that this price action is bullish on the USD JPY. So that was your your tutorial on constructing your charts. Okay, and our next tutorial will be on pivot points, which will expand further on areas to get in and out of the market. So thank you very much for taking the time to listen to our tutorial on construction of charts, and I will speak to you soon shortly. Goodbye.